Hey everyone, welcome back to my channel. If you are new here, please be informed that I share real and practical trading tips to help you become a better trader. So having that said, today's video is going to clear up one of the biggest confusions I see among intraday traders, that is using multiple time frames. If you have ever jumped between 1 minute, 5 minute and 15 minutes shorts and got more confused than confident, then this video is for you. So stay till the end of this video, and if you find this useful, don't forget to like, subscribe, and share it with your trading friends. All right. Okay. So to start with, let me ask you a quick question. Have you ever had a perfect trade setup on your 5 minutes chart, but when you checked the same chart on a 15 minutes time frame, it looked completely opposite? Then you hesitated, got confused, missed the trade, or entered late, and then you know what happens, right? Sounds familiar? Now, that's exactly why you need to stick to one time frame for intraday trading. Let me show this to you on the chart so that you are more clear on what I'm talking about. Okay, give me a bit here. Let me bring on the chart and the pen as well. Just a moment. So basically what you see on the screen right now is on the left hand side, it is a Bank Nifty 5 minutes time frame. And on the right hand side, you have the Bank Nifty 15 minutes time frame. Okay. And the line that you see here, that is a 50 EMA and the 50 exponential moving average. And please be mindful that the strategy which I will be discussing in this video right now for the example is just for the illustration purposes. I don't use it on my charts. Okay, though 50 EMA is a very strong EMA that can be used to trade, but on a personal front, I'm not trading this setup. Okay, whatever I'll be explaining you is for your understanding and to give you a gist of from where I'm coming from. Okay, what needs to be done, what should not be done, and stuff like that. Okay, so having that said, now what you see here on the chart is on the left hand side, as I said, it's a Bank Nifty 5 minutes chart, and we are using the 50 EMA to decide our entries. Okay, our entries, our exits, our stop losses, everything to that matter of fact. Okay, similarly on the right hand side we have the Bank Nifty chart. Again, it is a 15 minutes time frame, and we use the same 50 EMA to take up the trades. Now, the rule says that whenever a 50 EMA, whenever a candlestick breaches the 50 EMA on the top side or on the downside, we take the buy position or the sell position respectively. Now, what I mean here is if you see the left hand side chart, that is the 5 minutes time frame, what you see here is this particular candle. Just a moment, let me bring in the pen. Okay, all right. So I'm talking about this candle, right? This red or black candle. Okay, so this candle actually comes down below 50 EMA and closes below it. So what does this indicate? This indicates that we can initiate a sell trade. And where do we initiate the sell trade? At the close of that particular candle. We can initiate the sell trade somewhere here. Okay, and we aim for around 150 to 200 points. Since it is a Bank Nifty, you will easily get 100 to 150 or 200 points. Okay, normally on a personal front, I target for either 100 points or 150 to 200 points. Okay, now here, as I said, this will be your entry. Your stop loss will be the candle's high, which is just above the 50 EMA. Either you can have a stop loss here or the recent swing high. Which is the recent swing high? This is the recent swing high, right? So either your stop loss can be here or your stop loss can be here. Okay, but just be mindful that the stop loss should not be a lot of points. Okay, maybe you can take it around 200 or 250 points as a stop loss. Okay, so this becomes our entry, these becomes our stop loss, and our target is around 150 to 200 points. Okay, now if I get back, just a moment. Okay, So the low of this red candle is 56,520. Okay, so let's say that we take an entry at 56,520. As I said, our target will be around 100 to 150 to 200 points. Okay, so the low that was made was around 56,357, right? So 56,520 to 56,357. It will be around a bit more than 150 plus profit points, right? So a great trade, I would say, right? So the setup was, once the candlestick breaches the 50 EMA and closes below it, we will immediately take a sell trade and we will wait for a profit point of 100 to 150 to 200 points and we exit the trade after that. Okay, and we are following a 5 minutes time frame. So as I just explained, this was a p-perfect trade, right? And it was on a 5 minutes. Now let's move on to the 15 minutes time frame. Okay, on the right hand side, this is the 15 minutes time frame with the same setup. The segment is Bank Nifty. The EMA that we are using is 50 EMA. So what happened here? Do we see any candlestick that is breaching the 50 EMA and closing below it? We don't see it, right? We see these two. Just a moment, let me bring in the arrow. So we see these two guys, right? These two candlesticks, which tried to breach the 50 EMA and close below it, but it was not able to do so. And eventually it went up. So what is happening here? We are actually missing a trade. So as you see, in a 5 minutes time frame, you easily take up a profit of around 150 points. But when it comes to the 15 minutes time frame, you don't even get a trade. Yeah. So this is what happens if you follow multiple time frames and if you are trading intraday. Okay, that does not work. Okay, you will get confused. This is the exact thing which I wanted you people to know. Okay, let me just take out this thing. Just a moment, guys. Okay, so I hope the point which I tried to make, you are clear on that. Okay, so here is the truth. Okay, using multiple time frames does have its place, but for intraday traders, it often does more harm than good. Why? Because each time frame tells you a different story. So you need to know which time frame has to be used and what personality are you trading, what is your thought process, whether you want the trade to be really fast or you want the trades to go slow and steady and many stuffs. Okay, there are many dependencies depending on which you should be choosing your time frame. Okay, so for example, a 1 minute chart shows too much noise, right? Every tiny move looks like a signal. Similarly, a 15 minutes chart might show you a trend, but you will feel you're missing the entries. If you come back to a 5 minutes chart, it might show a perfect pattern, but your mind keeps jumping like, wait, let me double check it on a 15 minutes time frame. Oh no, maybe I should look at a 1 minute time frame. So these all things keep on going in a trader's mind unless and until he is very clear on what time frame needs to be followed. Okay, and in the end what happens is an analysis paralysis, I would say. Okay, you don't enter the trade, or worse, you enter it late with low confidence. The reality is the market moves the same way no matter what chart you watch. Okay, your job as a trader is to pick one time frame that suits your style and master it. Okay, that is your job as a trader. So why do we stick to one time frame? Because it trains your mind to see patterns very clearly. You build confidence in your system, you make faster and clearer decisions. Okay, let's say you trade Bank Nifty on a 5 minutes time frame. You wait for your setup, maybe a candlestick pattern, EMA crossover, or price action, whatever. Okay, you enter, you manage your trade, you exit your trade, all on one single chart. No hopping between time frames, no second guessings, no confusions. Over time, your mind becomes laser focused on what matters. That's it. Keep it simple. Okay, now the big question is, which time frame should you choose? I think I have already made a video on this earlier, but here is the simple summary to it. Okay, if you love very fast trades and have time to watch the screen all day, 1 minute or 3 minutes time frame chart might work for you. If you prefer to catch decent moves and don't want to overtrade, stick with the 5 minutes chart. If you like to take just one to two high profitability or high probability trades and want to avoid noises, you can pick the 15 minutes time frame. Okay, so choose it very carefully, guys, and please note that there is no one perfect time frame. The perfect one is the one that matches your personality and routine. Okay, choosing the right time frame is a big job in itself and would need a lot of time from your end to backtest things to finalize the best one that suits you. Okay, so the key is, once you choose, commit to it. Okay, once you choose the time frame, commit to it. Backtest your strategy on that time frame, build your trust in your signal, and stop peeking at other charts. That is the most important. Okay, so my message for you today is simple. If you want to become a better intraday trader, stop confusing yourself with too many time frames. Pick one, master it, and you will see how your trading confidence and results improve. Okay, I hope this video clears up your doubts and saves you from unnecessary confusions. If you found this helpful, smash that like button, share this with your trading friends, and drop a comment below. What time frame do you use for your intraday trades? And if you have any questions, shoot them. I will be happy, or I'll be more than happy to answer them back. Okay, let's help each other grow as traders. And of course, if you haven't yet, please do subscribe to the channel for more real and practical trading insights. Thank you for watching. Trade simple, trade smart, and I will see you all in the next video. Until then, happy trading and take care of yourself. Bye bye.